Stop what you're doing. If you hold silver in any form, physical, ETFs, mining stocks, futures, anything, you need to hear this before today's market closes. I'm not saying this to scare you. I'm saying this because what happens in the next few hours could change how you think about your position. And I know how that sounds. Every channel says urgent these days. Every thumbnail says watch now. But I've never been that guy. You know that if you've been here for a while, I don't post panic content. I don't manufacture emergencies. So when I tell you to stop and pay attention, I mean it. Something is setting up right now that most silver holders aren't seeing. And by the time they see it, the move will already be done. So stay with me. I'm going to explain exactly what's happening, why today's close matters, and what you should be thinking about before you make any decisions. Before I get into the details, let me be clear about what this channel does. We don't do guaranteed predictions. We don't do hype. We don't tell you to buy or sell anything. What we do is structured market analysis. We watch the data, we track the levels, we monitor the catalysts, and when something important is developing, we break it down so you can understand it. That's the mission. That's always been the mission. And today's update is exactly that. Something important is developing. Not a rumor, not speculation. Real positioning data, real technical structure, and real macro context that's converging right before today's close. If you're new here, welcome. You found this channel at an important moment. If you've been with me for months or years, you already know I don't waste your time. Let's get into it. So here's what's happening. Today is not a normal trading day for silver, and I need to explain why without overcomplicating it. First, we're heading into a weekly close. That matters because weekly candles carry more weight than daily candles. Institutional traders, algorithms, and large funds pay attention to where price closes on Friday. It sets the tone for the following week. It determines whether certain technical patterns confirm or fail. And it influences positioning decisions over the weekend when markets are closed. Second, we're sitting at a critical technical level right now. Silver is hovering near a zone that has acted as both support and resistance multiple times this year. Where we close today will either confirm strength above this zone or signal weakness below it. Both scenarios have very different implications. Third, and this is what most people are missing, there's unusual options activity expiring today. When large options positions expire, it creates something called pinning pressure. Market makers who sold those options need to hedge their exposure. That hedging activity can push price towards certain levels or create explosive moves once the expiration passes. Fourth, we have macro data that dropped this morning. I'll explain what it means in a moment, but the short version is this. The data came in different than expected, and the market is still digesting it. By the close, we'll have a clearer picture of how institutions are interpreting that data. So when you combine all four of these factors, weekly close, critical technical level, options expiration, and fresh macro data, you get a session that matters more than most. And that's why I'm making this video right now. Now let me give you context, because without context, levels mean nothing. You need to understand why this moment in silver is happening within the broader macro environment. Here's what's going on. Number one, inflation expectations are shifting. We got data this morning that showed inflation is stickier than the market hoped. Not dramatically higher, but not falling fast enough. And when inflation stays elevated, it changes the calculus for precious metals. Silver historically responds to inflation expectations. When people believe their dollars will lose purchasing power, they look for alternatives. Silver is one of those alternatives. Number two, the Fed narrative is in flux. Just 2 weeks ago, the market was pricing in rate cuts by summer. Now that expectation is being pushed out. Some traders are even whispering about potential rate hikes if inflation reaccelerates. That uncertainty creates volatility, and volatility creates opportunity, but also risk. Number three, the dollar is at an inflection point. The dollar index has been grinding higher, which typically puts pressure on commodities priced in dollars, but the grind is stalling. If the dollar rolls over from here, commodities including silver get a tailwind. If the dollar breaks higher, it becomes a headwind. Today's close might give us a clue about which way it's leaning. Number four, physical demand is not matching paper price action. We're seeing reports of strong physical silver demand, especially from industrial buyers in Asian markets. But the paper market, futures and ETFs, has been choppy. That divergence can't last forever. Eventually, one catches up to the other. Number five, geopolitical risk is elevated. I won't go into politics here, but you know what's happening around the world. Trade tensions, regional conflicts, supply chain concerns. All of these factors create a bid for hard assets as insurance. So when you zoom out, you see a macro environment that is anything but calm. And silver sits right in the middle of multiple crosscurrents. So why does today's close matter specifically? Let me make this concrete. If silver closes strong today, above the key zone I mentioned, it does several things. First, it confirms a weekly pattern that suggests buyers are in control. That pattern, once confirmed, becomes a magnet for more buyers next week. Second, it traps shorts. Anyone who positioned short expecting resistance to hold is now underwater. They either cover and add fuel to the rally, or they hold and pray. Both scenarios favor continuation. Third, it shifts sentiment. Right now, many retail traders are skeptical of silver. They've been burned before. They're waiting for proof. A strong weekly close is that proof for many of them. It could trigger a wave of sidelined money entering the market. But if silver closes weak today, below the key zone, the opposite happens. First, it confirms failure at resistance. That's a bearish signal that invites more selling next week. Second, it traps longs. Anyone who bought expecting a breakout is now holding a losing position. Some will panic sell on Monday, adding to the downside pressure. Third, it reinforces the narrative that silver can't sustain rallies. The narrative keeps sidelined money sidelined even longer. So we have two very different scenarios depending on where we close. And that's why I'm telling you to pay attention before the close, not after. Because after the close, the decision has been made for you. Before the close, you have time to think. Now let me show you how we're actually analyzing the situation, because I never want you to just take my word for it. I want you to understand the process so you can verify it yourself. Here's what we're watching. Number one, the key level. For this session, we're focused on the zone between 32 and 32.50. This area has been tested multiple times. It's where buyers and sellers have fought repeatedly. A close above 32.50 signals strength. A close below 32 signals weakness. Anything in between is noise. Number two, volume profile. We're looking at where the most trading activity has occurred today. High volume at higher prices suggests accumulation. High volume at lower prices suggests distribution. So far, today, volume has been concentrated in the upper half of the range, which leans bullish. Number three, the dollar correlation. We're watching the dollar index in real time. If the dollar weakens into the close, that typically supports silver. If the dollar ramps into the close, that typically pressures silver. Right now, the dollar is flat to slightly weak. That's a neutral to positive input for silver. Number four, the bond market. Yields have been volatile today following the inflation data. When yields spike, it can pressure precious metals because higher yields increase the opportunity cost of holding non-yielding assets. When yields drop, it supports metals. Right now, yields are off their highs, which is a mild positive for silver. Number five, mining stocks. We're watching the Silver Miners ETF as a confirmation signal. If miners are leading to the upside, that's a bullish sign for silver. If miners are lagging or diverging, that's a warning sign. Right now, miners are slightly lagging silver, which is something to monitor, but not a major red flag yet. This is the process. This is how we make sense of the noise. Not by guessing, not by hoping, by watching multiple inputs and looking for confirmation or divergence. Now I know some of you are thinking, okay, John, but isn't this just normal market activity? Doesn't every Friday have a weekly close? Why is this one special? Fair question, and here's my answer. Not every weekly close happens at a critical technical level. Not every weekly close coincides with major options expiration. Not every weekly close follows a surprise inflation reading. And not every weekly close happens when the macro environment is this uncertain. When multiple factors converge, the close carries more weight. That's just how markets work. Some days are noise, some days are signals. Today leans toward a signal. And let me address another objection. Some of you might be thinking, if this is so important, why aren't the big financial news channels talking about it? Because they're not watching silver like we are. They're focused on mega-cap tech stocks and the S&P 500. Silver is a niche. It doesn't get mainstream attention until it makes a dramatic move. And by then, it's too late for most people. That's why you're here. That's why this channel exists. To catch the setups before they become headlines. Now let me say something clearly, because I know some of you are feeling urgency right now. That urgency is valid, but it can also be dangerous. First, I need to remind my USA audience that nothing in this video is financial advice. I am not your financial advisor. I am not telling you to buy, sell, or hold anything. I am providing market analysis and educational context. Your decisions are your own, and they should be based on your own financial situation and risk tolerance. Second, I want to remind you that no single day, not even this one, should make or break your financial future. If you're positioned in a way where one Friday close can cause you significant harm, you might be overleveraged. And that's a risk management issue, not a silver issue. Third, I want you to remember that we could be wrong. The analysis could be correct, and the market could still do something unexpected. That's not a flaw in the process. That's the nature of markets. We're dealing with probabilities, not certainties. So yes, pay attention to today's close, but don't let attention become anxiety, and don't let urgency become recklessness. Let me also tell you what not to do before the close, because I've seen these mistakes too many times. Number one, don't panic sell because you're scared of what might happen. If you have a plan and a position that fits your risk tolerance, Stick to the plan. Don't let one video, even this one, override a strategy you've thought through. Number 2, don't panic buy because you're afraid of missing out. If you're going to add exposure, do it with discipline. Scale in. Use limit orders. Don't chase. Number 3, don't watch the tape obsessively for the next 2 hours and drive yourself crazy. Check in periodically, but don't stare at the screen like your life depends on every tick. That's not analysis. That's anxiety. Number 4, don't ignore what happens after the close. The close is important, but it's not the end of the story. How the market opens on Monday, how it reacts to weekend news, that matters too. Stay engaged, but stay patient. Number 5, don't make decisions based on what you want to happen. I know many of you want silver to break out. I understand, but wanting doesn't move markets. Price does. Respond to what is, not what you hope. So here's what I want you to do between now and the close. Step 1, know the key level, 32 to 32.50. Write it down. Watch where we close relative to that zone. Step 2, watch the volume. Is buying pressure increasing into the close, or is selling pressure taking over? The direction of volume matters. Step 3, check the dollar. If the dollar weakens into the close, that's supportive for silver. If it ramps, that's a headwind. Step 4, note the close. When the market closes, take a mental snapshot. Did we close strong, weak, or somewhere in between? That snapshot will inform how you interpret Monday's action. Step 5, don't react immediately. After the close, take a breath. Wait for confirmation. The best trades are not the ones you make in the first 5 minutes. They're the ones you make after you've processed the information. I'll be posting a follow-up update over the weekend breaking down what the close means and what we're watching for next week. So make sure you're subscribed and notifications are on. And that brings me to my request. If this update helped you understand what's happening in silver today, if you feel more prepared than you did 10 minutes ago, please subscribe. Not for my numbers, for your clarity. Because when the next time-sensitive setup happens, and it will happen, you want to be here getting real context, not stumbling onto some channel that tells you silver is going to $100 or crashing to 10 with no analysis in between. This channel is about preparation, not panic. It's about education, not entertainment. And it's about treating your financial future with the respect it deserves. If you're already subscribed, drop a comment below saying, watching the close, or prepared, not panicked. It helps the algorithm. It helps new viewers find the real channel. And it tells me this community is engaged and paying attention. Here's my promise. As long as you're watching this channel, you're going to get real, structured, no-hype updates on silver, gold, and the macro environment. I'm not going to manufacture emergencies. I'm not going to tell you every day is the most important day ever. But when something genuinely matters, like today, I'm going to tell you. And I'm going to tell you in time for it to be useful, not after the fact when it's just entertainment. Today's close matters. It's not the end of the world if it goes against you. It's not a guaranteed fortune if it goes for you. But it is a data point. An important one. And being aware of important data points is how you survive and thrive in markets over the long term. Silver holders, you now know what to watch. You know the levels, you know the context, you know the risks. Stay calm, stay prepared, and I'll see you in the next update.